I think we're going to get into a discovery phase over these next 12 months. And so a discovery phase means nobody knows where we're going to land. I could be wrong. It could happen in the next 3 months. I'll be happy with that too. And if it doesn't, I'm a patient investor. And I think that building wealth is really betting on your conviction of a major macro trend over time. And that's certainly what I'm trying to accomplish here. So yeah, I do think, a discovery phase is hard to measure where we could go, but it wouldn't shock me at all if that means triple digits.
The silver market has recently drawn significant attention due to a notable surge in physical deliveries, raising important questions about its future trajectory. This uptick signals a potential shift in the dynamics of the precious metals market and highlights burgeoning investment opportunities. The increase in demand is largely driven by investors seeking to hedge against economic uncertainties, as silver's historical role as both a store of value and a versatile industrial metal is utilized. Gold has been consolidating since April, but don't let that fool you. Silver has quietly surged 17% since April, and Tavi Costa argues this isn't the end of a rally, it's the beginning of a much bigger move. He is now focused on assets with leverage to silver, pointing to a clear supply-demand imbalance. Financial expert Tavi Costa strongly believes new highs for precious metals are coming within the next 6 months. He predicts a discovery phase over the next 12 months, during which the market will explore uncharted price levels. Citing past technical patterns, Costa says it wouldn't surprise him if silver eventually followed a similar path to triple digits. The silver market has recently come under scrutiny with revelations of critically low reserves reported by the London Bullion Market Association. This revelation raises pressing concerns about whether the existing 155 million ounces can sustain global demand, emphasizing the precarious nature of this precious metal's availability. Gold and silver have delivered stunning returns, but their performance tells a story. According to Tavi Costa, gold leads, and then capital flows into higher volatility plays, such as silver. It's the same pattern that's pulling the entire mining sector out of a long-term slump. The US dollar index is currently sitting on a significant support level that dates back to 2011, but Tavi Costa predicts a major shift. He says once that floor finally breaks, it's going to draw even more attention to silver and other gold-leveraged assets. Before we dive into Tavi Costa's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
We've seen gold move substantially over the last few years. I think that has given us the green light to think about, all right, we probably trigger a long-term trend in precious metals, and all these other things that are linked to gold are yet to have major moves. We've started to see some of these things trickle down. So, copper prices had a major move. Then we saw the royalty companies have a major move. Some of the senior producers have started to move as well, particularly the ones that have low production cost. And silver is now on the move as well. And I do think this is the beginning of a much bigger trend as well for the metal. If we looked at alone, since what is remarkable and how you can measure these things is the outperformance of silver during times when gold is not really moving. Gold has basically gone actually down 2 percentage points all the way back from April 21st of this year. And I'm not just picking that period specifically, but if that was really the peak of gold recently. I don't think that's a major peak or anything along those lines. But since then, we've gone sideways and silver prices have gone up about 17%. So, clearly the market is starting to take more risk over time. And I don't think this is a trend that is at its end. I think it's at the early stages. The gold to silver ratio is to 80. We're seeing more needs for silver over solar panels and all sorts of other capacity that the metal is likely to be used for. And so I'm extremely bullish here, and I'm continue to focus on finding assets that provide some level of leverage to silver itself. So yeah, extremely attractive and very compelling story behind the demand and supply mismatch of this metal. And the fact that silver has lagged over the last few years, a lot of people have lost interest on the metal, saying it never will change. It will never change. It would always be a lagger relative to gold prices. By the way, the same thing happened with the mining industry. I remember not too long ago, many people were saying that the mining industry was structurally broken. I was like, no, that's just a lag. Gold prices go higher, and then silver price, and people start taking more risks. They look for things that have higher volatility. They start buying silver and other things. Of course, if the underlying metals improve, the margins of companies with energy prices in the floor are extremely attractive. And so everything is somewhat connected here. And I also find it interesting that these waves are all happening in a sequence. And the other thing that is happening that I think could be in line with this movement on silver, what's happening with I think the most important chart in the world right now is the dollar, is the DXY index. The DXY index is currently, in a major support all the way back to 2011. Once we break that support, of which I am of the strong view that we will see a break of that, because it's not even, it is a market driven movement, but also almost like a policy that the government needs to run, because we cannot sustain not only these levels of rates, but also such an overvalued dollar. Once we break those, I think it's going to bring even more attention to the riskier parts of the gold levered assets, such as silver. And I think we're very close to that. And to answer your question on performance and returns, like, I don't have a crystal ball either, like anybody else that comes here in your show, but I do think we could see, and a caveat for compliance reasons, I really don't know if this is going to be unfold or not, but I have a strong belief it will. Otherwise, I wouldn't be trying to deploy capital and spend my time in this industry. I do think we're going to see new highs over the next even 6 months. And I think we're going to get into a discovery phase over these next 12 months. And so a discovery phase means nobody knows where we're going to land. And we're going to know once we land, because it's going to be we're probably going to consolidate at some point, which is kind of where gold did. Gold kind of had this triple top for a while. And I remember saying triple tops never work. We always break triple tops. Again, this is just a technical foundation of analysis that gave us even higher conviction, knowing that the fundamentals were the big drivers of all this. Same thing here. So you got a peak 2011, peak of the 80s and late 70s. And now, you're going to bump on that level again, and probably going to hit a discovery. Probably going to bump on that level, lose a little momentum, and then back again. And once we go from there, it's going to be discovery phase. And that's what I call the 12 months or so. I could be wrong. It could happen in the next 3 months. I'll be happy with that too. And if it doesn't, I'm a patient investor, and I think that building wealth is really betting on your conviction, a major macro trend over time. And that's certainly what I'm trying to accomplish here. So yeah, I do think, a discovery phase is hard to measure where we could go, but it wouldn't shock me at all if that means triple digits.
Silver isn't just money, it's essential to modern tech, from solar panels to the AI infrastructure race. Tavi Costa says silver's tight supply and rising demand could spark a big rally as AI, renewables, and geopolitics collide. With pure silver mines rare, one of the few survivors is Hecla Mining, is now showing signs of a breakout. Primary silver mines, where silver is the main product, only account for approximately 30% of global silver production. The majority comes as a byproduct of mining operations primarily focused on extracting other metals, such as gold, copper, lead, and zinc. This production structure creates a situation where the silver supply cannot quickly respond to price signals. Silver demand is booming, driven by a surge in solar and a historic G7 construction push. However, Tavi Costa points out, this is just the beginning. With no major new discoveries and supply tight, the real fireworks will come when history reminds investors of silver's monetary status. Costa sees this as the perfect setup for a long-term bull market. The silver market is experiencing a perfect storm of supply constraints and growing demand that has led to a significant market imbalance. This imbalance has contributed to silver's impressive performance, with prices rising approximately 28% year-to-date, making it one of the best-performing commodities in the current market. Let's get back to the interview.
Any person you talk to who is in the industry of or the sector of technology will have, or majority of them will have especially in the building of infrastructure for technology, will understand that silver is also a significant portion of all this. and is a very critical metal. And so, but copper is also, I'm not trying to pick winners here. I'm trying to own winners basically. But yeah, I want to own gold, I want to own silver, and I want to own copper too. And I think all of them are going to do extremely well. And there's so many ways to think about this, but this artificial intelligence trend is definitely a race that is different from the internet, and it's different from the real world, analogies that have been drawn in the past, because it's not just the technology itself. It's certainly a national security race across countries, and who wants to be the dominant player country-wise quicker. And so there's a need from every country to build up as quick as possible to get there. And so was the internet like that? No. Was railroads like that? No. So AI does have that difference. It's everybody wants to get there first, and it's just gonna, I think, feel a major construction boom in all sorts of economies that we haven't seen in a very long time. A lot of times, I think that would change over time. The reason why it's secondary is because it's so cheap as well relative to those other metals. And that may change in the future as the price of silver starts to become more elevated. We're seeing this in our own, again, it's a secondary metal for our own mine, and because we got zinc and lead, and because the silver prices is becoming the dominant driver of revenues now. And that's happening not just with us, it's happening with other mines that are facing the same, beneficial movement on the metal prices. But yeah, I don't know many pure silver plays that you can find. I think companies like Hecla are a great example of, in a great way to measure performance of silver miners. It's very rare to see a company that has sort of sustained throughout cycles, especially the mining cycles are so severe on the upside and the downside that it's rare to see a company that has survived all these years, particularly in the silver space. I mean, let alone the gold space, but silver is extremely difficult. And so you look at the prices of Hecla over, all the way back to the 80s, we're probably breaking out from a major downward trend. And as we see institutional awareness in this industry, eventually that should drive the bigger players to benefit from that. And so we're seeing the beginning of that. I also found interesting that when you, as an investor, you look at these companies, particularly the big ones, the implied volatility of the derivatives or call options in most of these companies are still very low relative to what we tend to see during breakouts. Like Hecla, not the other day, with reporting earnings, was up 20%. When you look at their implied volatility prior to that was, much lower than that for the next few years, annualized ways. And so all I'm saying is most of these plays are still available in the markets, in my opinion. But going back to your question on supply deficits and all this, it's there's countries, if you think from a country standpoint, there are countries that are still producing large amounts, Mexico and Peru, relative to the rest of the world. But if you follow their production very closely, it's been very, small, I would say incremental changes in production. And it's a function of the difficulty of finding new supply of the metal. And you can follow this in many databases in regards to what's been happening with the supply of silver. And I do think that that's really what creates the setup for, and it's why I like silver more than a lot of other metals, is because of that supply constraint that we clearly have. On the other side of copper, for instance, we don't, right? I mean, we have enough copper in the world. The problem is we don't have enough copper above ground, which is also an issue. And so that's the striking difference between the two. But again, when prices move higher, eventually that drives supply as well. It's going to create the need for finding discoveries. And, that's what happened in the 70s. First we had the moving prices. In the 80s and 90s, we saw the major discoveries of precious metals all over the world because prices were much higher, and it created a need and also an incentive for people to look for those discoveries. I think what's driving is the link with gold, and we're yet to see the monetary aspect take place here. We're seeing the industrial side of it at a clear upper trend from particularly solar panels the solar capacity in China, for instance, has surged by 60% over last year. And 60% of increase is essentially a huge part of the demand this year. It's double digits from one country. And so if you start doing the math, and there's certainly a push towards solar panels, particularly coming from folks like Musk and others. And if we do see that occurring, then you can start extrapolating what that could look like. I also think that, we're in the midst of probably one of the biggest construction booms we'll see in history. This big, beautiful bill does anything but really stimulate construction in a large way, allowing companies to, expense on basically year one, all their capaxes. And it is really interesting how that may drive a real infrastructure boom, of which other times in history we've seen this back in the early 2000s, driven mostly by China. This time now driven by, we can easily say, the G7 economies. Who knows if it's not G20? And if that's the case, then, this could be a very drastic change on demand for metals in general. And I'll be shocked if silver doesn't participate on that. Now, on the monetary front, as silver prices begin to rise, people are going to start obviously linking the history it has as a monetary asset. And that's when things get really crazy. We're so far from that yet. Rarely people talk about silver as a monetary metal, and rather more about its industrial properties. And that would change, in my opinion, as we get into the middle to later stages of all this. Eventually, I think we're going to get there. And that to me is where the big move will come from. And it could even be driven by central banks purchasing the metal. We own the fourth largest silver mine in the world, which is a private company. We see purchases from Asia and other places to a degree that we've never seen. And so who knows who is behind those purchases as well. I think those are all interesting questions. But yeah, it's extremely interesting what's happening with silver right now. And the fact that we're just not seeing any major discoveries over the last few years. I mean, name one that is substantial enough to change the supply curve. And simply, we have not seen one. And so it is really important to see that the demand is surging, supply is fairly limited. And, that's usually the recipe for a real long-term bull market.
Historically, silver prices tend to pick up speed roughly 12 to 18 months after gold prices. The yellow metal started breaking out in early to mid-2024, surpassing all-time highs. True to form, silver is playing catch-up a little more than a year later. The lag may have frustrated speculators, but it's a sign of long-term strength. Structural trends, such as the global shift toward green energy and changes in monetary policy, could accelerate the rally. If silver maintains its breakout zone, the stage is set for a robust and sustained bull run. A move toward $50 and potentially beyond now appears increasingly likely. When the monetary spotlight finally swings back to silver, will you be positioned to ride the wave or watch it pass you by? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.